What's up, guys? Welcome back to DCA. Today, what we're going to do is talk about Bitcoin. We're going to look at where the price is right now, where we're sort of range bound, anywhere between this 38,000 up to around $44,000. We've been doing this now ever since essentially the beginning of the year. About the middle of January, we came down to this level, and we've sort of been right in this range ever since that time. So we've showed on prior videos how if you look at this volume profile visible range indicator, this shows you where your trade volume has taken place. In other videos, we've actually looked at the on-chain data, which shows you exactly where the majority of the coins are held on the Bitcoin network right now. And we've actually seen that, anywhere between 10 to 15 and probably even a bit higher than that now, 10 to 15% of the coins, all coins of the Bitcoin supply are held right at around this 37 up to around $40,000 level. So you just have a massive support level right where we are sitting at right now. And we talked about this, dating all the way back to the last few weeks of February, that we were saying that, it's very likely that you're going to see the price just sort of sit right in this range and then encounter resistance every time it gets up to around $45,000 or $46,000. So we've known this fact for a while now. In my opinion, looking at things like this are actually better than any sort of trend lines you're seeing or any fib levels, things like that, because those are essentially trying to estimate where the coins are being held at, or where your natural support and resistance levels are going to form. But when you can look at things like this and you can look at exactly where the coins are actually being held at right now and by whom, so we actually broke that down into both short-term holders and long-term holders, that is doing all of the work that people attempting to draw trend lines on the chart. And it's not estimating, it's showing you exactly where those coins are held at. What we're going to show here right now is this level here. And if you don't know what this indicator is, this essentially just shows you when this is sticking out farther, that means more price volume has taken place at that specific level. So for instance, I'm showing the cursor right now on $37,968. At that level, so right at this level here, when you have this larger horizontal axis bar, that indicates there's been a large quantity of volume taking place at that level. And therefore, naturally, you will encounter more support and resistance at these levels. Okay, so up in this level, up at around 46,000, you start to get another area of high volume. So just look at the amount of volume, though, that we have right in this level. It's just enormous. So for the price to go much lower through this level, it would actually take quite a lot, because we've now developed so much support in this level that it's going to take a lot to drive the price below it. And where the bottom margin of this level is at around $32,000. So conversely, if it did drop below this level, then you get this massive resistance level coming back from the bottom side. So if we dropped below this 32K level and tried to come back above, it would be quite difficult to do that. All right. So if we go down further, you can see that you don't really have much more support until you get down to around 23K. And then below that, again, you don't have a lot of volume until you get down to around 19K. And that's simply for the fact that if we just go back here, look at how much time we've spent in the 20 to 30K level. And we're looking at the entire price history of Bitcoin here. And if we just look, so we'll just go from 30K all the way down to 20K, we've spent what? From right here in December until January. We've spent 1 month at that level, and we were just basically gliding through it the entire time. So there's just not a lot of support formed in this 20 to 30K level. Doesn't mean that, if we did drop below this lower 30K level, that, we couldn't form that support. But at the moment, there just isn't much, support right at that level. So you would very likely see a lot of high volatility action occur if we did get into this level. And I also think you would see a lot of big money players step in and start buying the asset the second that we got below this 29, 30K level. So That's just kind of setting up what we want to talk about today. What I would like to look at today is this. This is the active users on the network. And you can roughly think of this as being the quantity of demand on the network. So as your active users are rising, you can think of this as the number of retail investors in the market. And the number of retail investors in the market are, contribute to the price in two ways. Number one is slowly over time. So if we just take a broader look here, you'll see that there's a general increase in the number of active users over time. So another thing you'll notice is that during the parabolic phases of the market, so here, here, and here, you'll see this spike in the number of active users. Okay, so in the 2018 cycle, 2017, 2018 cycle, we went from around 650,000 users all the way up to around 1.2 million users in a short amount of time. So this was August. So think from August until December, the number of active users essentially doubled to its peak. And then after that cycle, after that parabolic peak ended, we went all the way down to around 525,000 active users. So we've been building that back up over time. And in this cycle, when we reached this parabolic peak in January and December, we got all the way up to around that 1.2 million peak users again. So then, just like we saw in the last cycle, in May, we sort of dropped off this cliff. All right. So you saw us go from around 1.2 million all the way down here to around 750,000. Okay. So another large decrease. Now, just like we saw in 2018, we're making this slow, deliberate recovery. So, we made this low of around 760, 750,000, and now we're sitting at around 850,000. One thing you'll notice though is in November we got a peak, and you'll expect that. We went and made a new all-time high in November, and a lot of altcoins made a new all-time high. But ever since that November peak, we've been gradually decreasing. So if you are using this as sort of a metric for thinking about demand in the market, this is sort of indicating to us that the retail market has kind of, they've left the building. Now that's one side of the coin. Now the other side of the coin is the exchange volume. The quantity of Bitcoin held on exchanges can be thought of as supply in the network. Okay, so we have demand, at least your retail demand, coming from that metric we just showed, your active users. This is, however, showing you the amount of Bitcoin that is actually held on the exchanges. So as you could imagine, when individuals are selling Bitcoin, they move it out of their cold storage wallets and they move it into the exchanges. So as you would see the quantity of Bitcoin held on exchanges increase, you can infer that individuals are selling the asset. So we saw that basically all through 2020, what was happening? We sort of made this peak of Bitcoin on exchanges actually right at the COVID capitulation event in March of 2020. And then what happened? Individuals saw this as a buying opportunity, and the amount of Bitcoin held on exchanges just started plummeting. And when did it start falling until? And that was right around here, right near our peak at 63K. When we hit 63K, your Bitcoin on exchanges started to rise again, meaning individuals were taking the Bitcoin out of cold storage, moving it onto exchanges in order to sell it. And that coincided perfectly with the market crash. Okay, so right around here, you could see this was starting to ramp up. We started making, we went above this level here, right at around 2.6 million Bitcoin on exchanges, and it started moving up. And as it started moving up, the price in a commensurate fashion started falling. Okay, all the way until here in July. Then in July, people started taking Bitcoin off of the exchanges again. And what you'll notice is, and this is the key point here, so we are right now actually sitting at the lowest point we have been the entire market cycle. We're right at the same level that we were at when we were at 63K, meaning, the conditions are obviously different right now though, right? We're trending sideways. We're sitting at around 38, 39K. and people are taking the asset off exchanges. In fact, if you look here, back in the first week of March, a ton of Bitcoin came off exchanges. Okay, so that means larger players are pulling Bitcoin off of exchanges right now. You're seeing the demand for Bitcoin specifically, as well as Ethereum. You're seeing it exponentially increase right now. So that doesn't always have a positive influence on price in the shorter term, because like we said, what you'll see with the price of Bitcoin is it will spike to these higher levels when retail demand increases. And right now we're at a place where there simply isn't a large degree of retail demand. Okay. So you have this side of the coin where the supply side is looking great. In fact, it's looking as good as it could look right now. People are pulling Bitcoin off of exchanges, putting them into cold storage wallets. At the same time, though, the retail interest in the market is, approaching very low levels. Okay. So we're in a downtrend. Overall, we're in an uptrend, but in this shorter term, ever since November, we're in a downtrend. Okay. That's kind of how it goes every cycle, though. You'll see that people are taking Bitcoin, they're putting it into cold storage wallets. Institutions are buying, larger investors are buying, retail is even buying. But in order to get these parabolic peaks like this, you need the retail market to be coming in force, because a lot of the movement of the asset by the institutional type players is being done over the counter. And that won't lead to an exact price movement at the time. So over the counter transactions are performed at a set price. It's an agreed upon price. Whereas when you buy on an exchange, you're buying at whatever the market price is. So when an institution buys over the counter, they buy with a seller at a set price, and that happens off of the order books. But when you buy from an exchange, you're buying at whatever the market price at that time is. So that's how, over time, the institutions buying more of the asset leads to a supply shock, which leads ultimately to a higher price. But in the short term, that typically won't have any massive effect in terms of the actual price on the market books at that time. This is why my particular strategy that I use to get into the asset is dollar cost averaging, because I know that there's lots of bullish information out there about the crypto market right now. We all know that. But at the same time, we know that the price has been sort of stuck in this rut here, anywhere between 38K up to around 44K. And I think you're going to continue to see that so long as the retail market is sort of not in the market with us right now. As long as this continues in a downtrend, I think you'll see the price continue to move down. But I also think you'll see where larger institutional type investors are seeing that as a buying opportunity. So overall, what we're saying is, this is extremely bullish to see this Bitcoin on exchanges down at these lowest levels here. This is why you should be considering getting into Bitcoin right now, because anytime you're seeing something like this, you don't know when the price could turn around. Sure, we could go down from here, but if you are long-term focused, you can only buy so much off of the exchanges before there simply becomes, a point where the demand is overwhelming the supply, and it creates a position where the price has to go up. So you still have the stock market doing very poorly. You still have the conflict with Ukraine and Russia and the effect that that's going to have on things like commodity prices. You have a lot of uncertainty still in the market. So I don't necessarily see this being a situation where the price is just going to go taking off, within the next few weeks up to new all-time highs. But I do think that if you have that longer term focus in mind, this is an extraordinarily bullish sign that we're seeing. Overall, I'm really bullish right now, guys, especially in the mid to long term. In the short term, as always, I don't know what's going to happen, but that's why I'm dollar cost averaging every week. I dollar cost average. It decreases my own personal volatility, and I'll do the same thing if we start going up from here. So if you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.